yours.
Yes,
Oh, yeah.
they're both me. Whoosh. We don't need this right now. Okay. Cool. So, what I'm trying to look at now is the VIX. Since the VIX is what, 50 now? All right, hit 50 today.
Yeah.
And so
Last time we did this is
what the
December.
fuck? Oh, I feel like I don't have enough time.
Yeah, do 3 years.
Yeah. Why do I have 1 year set to this actually? All right, cool. So it happens a lot. This is also, we've already reached the highs of any time ever. So I've noticed this happens too. It never fully kind of comes down. It holds, it falls, holds, picks back up, and then does it again. Right? So that's been pretty consistent with these like crazy VIX spikes. So here as well. So it's like we hit the top. Like I feel like we've actually already hit the top.
Yeah, that's what I feel too.
We hit the top, and then it's gonna start pulling back down over the next however long. And that usually will take, for it to hit, within the 12-13 region again, it's going to take a little bit, like how long does this take? 81 days, so 56 bars. So they got about 3 months or so on that. So we always get a pullback. So what we could do is I feel like this happened a little faster than usual.
Well, it's already bigger than December, so.
Yeah. But also the market has
What
more
day
volume
is
than
that
December, right? 1, 2, 3.
Well, year 2015, so flash crash maybe.
Oh, that was a flash crash for sure. This is December, right? So.
Yeah, that's December.
December. We're bigger than the flash crash of 2015 almost. We were like pushing for it already.
Not yet, yeah. What was that? The one before December.
This
right
one?
Before December. Right. Before December.
Oh, okay. Yeah, hold on. Sorry.
Like
this one?
Yeah, what was that?
This was just the trade deal shit. So this is October, right? This is before.
Further.
This one?
That. 2018.
December? Oh, January.
2018.
No, so that's February, right?
Yeah.
So this is February. It's so hard to keep track of where this shit's going. This is 19, right here.
That one's yeah.
This is December.
So that's December.
Yeah, we're talking about this one.
Yeah, that one.
What was this one?
I'm talking about that one, yeah.
Yeah, I don't know what this was.
Feb of 2018. And so that's when I started trading.
Yeah, so we didn't know about it at the time.
So what is that though?
I don't know either.
Does it correlate with the SPY?
Yeah.
I think SPY did.
Oh, SPY
did
definitely.
not do that.
SPY definitely did this around that time. What's the date? So February of 2018, right?
Yeah. Oh, it's
Yeah.
leading up to.
Yeah, and it was next year.
Okay. Nice.
Yes. This looked very. Oh yeah, we were here for this whole service. All right. Yeah, we're getting a pullback now. I really hope that it holds here for the next week.
Yeah.
Otherwise, that other play is gonna get fucked. Stupid. We could have just put it on a different account. Okay, it doesn't matter. So why am I focused here? It doesn't matter. So what we're looking at is the VIX. So on average, let's say from the high, which we don't know where we are relative to it, it takes for us to fall back into the $12, $13 range. It takes roughly, yeah, it's about 70 days, 50 bars. So 70 days is 2 months. Or it's a little bit, it's like 3 months, which is what we have on ours, right? We have about 3 months on ours. So what we could do is we could either offload it after we hit the first drop, wait for the pickup, and then buy them all again, which I think is a pretty solid one. Like, we don't offload the whole thing. We offload like 50% of it, and then we take the profits. It'll pull back up. We'll lose some, and then we'll re-enter with the profits that we gained from the initial drop. So that way you can re-ride it, right? And you can ride it bigger, the last part of it. It'll be a little bit IV spiked, but it's not terrible. Because, okay, so this initial drop will happen roughly in, what? In 20 days? So 2 weeks. So we could try that, actually. We could try playing a
50%.
much... Yeah.
This also around the strikes of 25, 24.
Mm-hmm. We could do a month instead of 3 months. Play not heavy, but...
Yeah, that's the idea.
But,
a month, 2 months, and 3 months.
Yeah, exactly. So we play different time structures for this.
Yeah.
I think we should take the month now. Like, right now. Like, set up our strikes and figure out, like, how.
Yeah.
So, because it's like, we can double down.
So I already see it, like, 24 is the area that we
24, exactly. Yeah. So
a month from now, 24.
So, what's today? Today's 28th, right? So we want to take it all the way at least to March 28th, 5th. So the 24 puts, they're already $1.
Okay.
So they're already kind of expensive.
So then it would make sense to do debits here.
Exactly, yeah.
And then, so that's 20. And then we have how many... So in the short term, it's more risky,
Yes.
right?
Yeah.
Long term, more probability.
More probability.
So then we want, like I said, like 50%, 30%, 20%.
Yeah.
Is our ratio.
And this is where we're going to put the, what, 30%?
Yeah.
Okay.
So, well, technically 20% and 30% in longer terms.
Yeah, 30% definitely in the longer terms, play those heavy.
50% in the longer.
Because also, if this doesn't work, then we lose the entire value of them. Right. So if we take debit spreads onto this one, we can still make... Or, I mean, unless the OTMs kind of push up hard enough.
Yeah.
I mean, so what you want to know now is...
It needs to get close.
It needs to get close, exactly.
So, but that's about it. Let's look at the smallest spread between this, I guess, 17 and 24 ranges.
Okay. So here is a 10 spread. Here's an 8 spread.
Don't look at the bid and ask. Look at the last X.
Alright.
So,
well, this is even more skewed.
35 and
5.
40 to 5.
That's not bad.
So now those are more accurate, I feel like.
Yeah, these are 40.
40, okay.
This is a lot. Like, I mean, I don't know. I feel like this last executed is also pretty weird.
It's pretty weird. You want to put the open interest on it too?
Yeah.
See how many are holding?
Yeah. Let me...
Layout.
Oh.
Layout.
Why am I so blind to this shit sometimes? Open interest. Okay. So that makes sense. I mean, they're also that expensive. Why is this volume out here? Oh, it's because of that thing. So that's better. Okay, so there's a shit ton in 20s around this time.
Okay.
Which means, I mean, if the spread between these is actually 2, that's fucking great.
Last execute is $1.35 though,
Mhm.
so people are actually paying that much.
Let me, because we're not gonna be able to see our own. Like, I want to be able to see this, what we're doing, because I'm gonna forget. Yeah. Okay. Cool. Now we can look at the prices because I just want to see what's happening.
Okay.
So so we could get a spread. If this is legit, if this spread is legit, or if this spread is legit, these are really good. Or if any of these spreads are good. So I could just place a single order and see if we get it. Oh, I can't do it on this one. Yeah. Let me try.
The 17 and 16 are the most accurate, I feel like. This 5 cent is good, and also it has a decent amount of open interest and volume.
Okay. So we could open this up on the...
Tasty, yeah.
Yeah. I love myself for fucking that up. Okay. Cool. All right. So if we look at the VIX, Okay. So we're looking at March 24th. We could go a little bit further and do April. If we were to do that.
Well, no, let's do March. Like, do the 1 month, 2 month, and then... Because we have the according...
Yeah, okay.
20%, 30%.
So, if we look at the 20... These, I feel like tasty prices are better. The FE is 146.
And then if these aren't good, then we can maybe look into the call credit spreads then.
Mm-hmm. Selling
As
those.
opposed to...
We do both. Play a little bit of both sides. So this is in the next month. If it doesn't die down. Man, this account's blowing the fuck up right now. Why is it still going higher?
Yeah, because we're in TLTs.
Why are they still going up so much though? It's crazy.
Yeah.
Okay, so... Because the problem with this is that even if we were to buy outright puts for, like, let's say we bought it for 21, if it gets close to the money, it's only going to be worth about like $1 or $2. So it's like 500%, which is fine, but it's like, for something like this, you want to play it really large and structured. So that's a little too expensive for it to be worth the cost. Because when in reality, if you can get it on, let's say this 10-cent spread, or no, not this one, but...
Thing is, the spread will go to like 50 instead of 100, like we're thinking. Realistically, it'll go from 10 cents a spread to 50.
What?
So, 50
I don't understand what you're saying. What spread?
on any of these.
Oh, like the realistic spread of them is like 50?
Spread, instead of the technical $1 if we hold throughout the whole time, we're going to see a 50 instantly if it works quickly.
Let me see if I can show more on this. Okay.
Which is great, still. But
yeah, it's
we
50 to
want
100, right? Because you're getting the full dollar spread.
Yeah.
So it's not that much.
So yeah, it's that as opposed to the naked.
Which is gonna be how much, you think?
Well, actually, if we're thinking, can you scroll down to where the in the monies are or at the monies are?
Yeah.
So what's the spread between those two? It's actually at the money, so even lower.
Why are these more? What the hell?
So that's where the at the monies are.
Yeah.
The
They're like $1.
2K. So that's like, yeah, there's about 300. Which makes sense. They are. Oh, whoa, those are nice though.
What, the selling the calls on these?
No, the spread between the two are almost maxed.
Oh yeah, it is. How much is that? Yeah, that's almost maxed. That's
Yeah,
like
so
10 cents off the max.
So maybe 50 is actually a wrong prediction. Maybe it'll actually be $1. So 10 to $1. So 10x essentially.
Yeah.
So that's pretty good to get closer in the strikes and then still finance it and use get a lot of contracts while still only using 20%. So
okay. So what do you think?
So I think, what we're looking at those around the 20s.
So you want to sell these?
No, I want to buy the debit puts.
Buy the debit puts.
Like we were doing already.
Oh yeah. Sorry.
Yeah.
So if it hits like that, then it can make actually a really good. But these are 5 cents apart.
Yeah, that's fine.
So if we go in the money,
so it'll be $1 apart.
so it's 13. So we want to make sure that they're in, right? So we gotta make sure.
We're a month out, so we're around the 20 level.
Yeah, so around 20 to 20, around this much, right? So if we do 20 to 25, the difference is kind of big.
Yeah.
It's like $1. And then the max on those is what? 500?
500, yeah.
500, that's still 5 times.
So I'm thinking $1 spread.
Yeah.
But in large quantities.
Yeah. That's what I was thinking. Like,
so how much actually total do we want to put in here? 500?
I was thinking, maybe $500.
Yeah, 500.
500 would return how much? 500 times 2?
Well, I guess we need to calculate it when we separate in percentages.
Yeah.
Actually, you can backtrack now.
We can check it on Tasty.
So actually, if we have, is there a pen here? So 500 here. So 50% of that, 250, right?
Mhm.
30%.
Well, are you asking how much I want to play in total for all the VIX
all
plays
of them
combined?
combined.
Oh no, I want to play way more than 100, 500. I want to play like
1,000?
2, maybe
2,000.
2 to 2,500, close to.
Okay.
Yeah.
It's up to you. Or you want to do the calculation?
I mean, so if we do that, so let's add a 2 here. So it's 2,500.
Actually, you can't because that's not how big account this is. This isn't a count.
Well, we're not
This
gonna do.
account is not big.
Well, I'm talking about 2,500 period total. So here we could buy like
You
two
can't
thou-
sell here.
we don't need to. For the
Oh.
out the money ones, we'll just buy and hold them, like we were planning to.
Okay.
Yeah. So some of them are gonna be debit spreads. I don't think we're gonna do any credit spreads because the credit spreads already priced them in, right? Or I mean, like I don't know if there's a guaranteed credit like right here, right?
Credit spreads are good.
That's what I wanted to do. I want
Puts
to
or calls.
calls.
No,
I want to sell the calls. Yeah.
the in the money calls.
Yeah. So if we
That's
sell
what
the
you want.
so these are the in the monies, right? So here the spread on them. Let me go a little deeper. So this is gonna be a little riskier, but the spread on
No,
these is
it's less risk here. Credits.
credits are guaranteed because they will lose value regardless of whether or not the IB kicks.
Yeah.
So if the pricing isn't maximized, then you're fine, right? So with the credit spreads, yeah, that's my thinking. I was like, oh, okay, so credit spreads will work. So half credit spreads, half debit spreads on maybe the
So
monthly
half
position.
credit, half debit, and half naked.
So like the spread on these are 100, and the value of these are 50. So the collateral on that is 50. So the total possible loss is 50 per. That's not terrible. If we play that up to like $500, then we can make $500 if the credit spreads kick in. But I think as far as credit spreads go, we might want to go a little bit farther out. Possibly. One thing I'm wondering though, are any of these maxed? Like, this is fully fucking maxed, the 14s.
Mhm.
But if you go like a little bit further, so we do July a little far. So we do June. June for the 14s. How much the max on these? 70? That's not good. But wait. That doesn't make a difference because what we're just looking at right now, the March 25th, if the 14s are maxed already, like, because this is 14.5, or whatever, 14.5 and then 15s, because these are already maxed out, you could more or less get everything. You know, I feel like I'm not speaking properly, but like the 14.5 is worth this much, right?
Mm-hmm.
Oh wait, did I misread these? I feel like I did. Is
They're
the
about
difference?
50.
They're about 50?
Mhm.
Okay, yeah. So it's 50. How's it 55 apart? Do you see it?
Yeah.
That doesn't make any sense. But okay, let's say we fill it, okay?
Mhm.
At 50 somehow. Or we downsell it, right? So maybe we pay $5, right? So we give up the $5 right now. But then if this thing drops, then the spread might drop. If you get close, the spread is going to drop. And so we pay $5 and the spread will drop maybe, like, let's say it gets close, right? So these things right here aren't maxed out anymore.
Mm-hmm. Mm-hmm.
And so because they're not maxed out anymore, or right here, for example, I'll do the 50s. The 32, 35s. It's kind of weird. I don't know. It's kind of weird. It would work. I think it would work because the expiry is good. As long as you can get something that's as close to here as possible, and then you sell those will definitely net you for sure, like guaranteed. So, because the TLT or the VIX will come down.
Mm-hmm. 35, I think, on those two. We're risking 70 for 30. I think. Actually, let me think about this. Like, as a market maker, obviously we see that the puts are more costly than the calls.
Yeah.
Because they know that the shit goes down.
Goes down, yeah.
Eventually. And so they wouldn't want us to get filled
At the maximum.
like,
No, we'd pay.
we gotta pay for this, but it's something that's high probability, which is why
Yeah.
we're paying more.
Right. It's almost guaranteed.
Mm-hmm.
Assuming that the VIX can drop.
Right. So we can we can get a 1-to-1 ratio, like risk 50 for 50, that'd be good.
I think we already got that, didn't we?
And yeah, you said somewhere.
Right here at the 14th.
But like
That's
at
a
our
little deep.
prices.
At like closer to 20s?
Yeah, closer to 20s because this is the month I remember.
Well, these are $1 off and these are about 40 away, so it's closer.
Mm-hmm.
We can go a little deeper. It's a little too deep, I think.
Yeah, because I'm thinking about this in like what this has to do. The other one, like December, was a recovery straight shot.
Mm-hmm.
You know what I mean? This, I don't think is a recovery straight shot. I think it's maybe a bounce up.
Up, yeah.
And then
Pull back down so far.
So, but I know the VIX obviously will come down gradually because the volatility will decrease.
How does the VIX operate in recessionary periods? I can actually go back to 2008. No, I can't because
all it is volatility. So if it is in a recession, but everyone knows it's a recession, then the VIX will be still like this because there's no volatility. Everyone knows it's a recession.
Yeah.
Simple.
Let me go back and see what the 2008 year looked like. Okay. Scheisse. Okay, well,
how many months after?
It took a fucking long time.
Yeah.
So it hit a peak, and didn't even come down to 20 until almost 207 days later.
Okay.
It's huge. If that's what this is, then fuck.
Recession, then.
Yeah. The VIX will hit, for sure. But it works. The VIX always comes down. But you need to time that shit. So you might actually even hemorrhage on this. And you might have to replay your years out. But if you get the year outs right now, also, like even before it even goes higher, then you can retime it where it gets more, where it gets cheaper because it goes up, right? But then once the IV is gonna blow it up as it goes up, so we're gonna pay more once the shot up already happens. So like if we were to buy, what year is this? Do they even go out that far? Yeah, if you were to buy these are like already fucking $2.
What's the spread? It's $40.
Yeah.
For 17.
This one's 60. This is a bad thing though. It keeps going up. How long did it take for it to keep going up? Took 2 months. So there's a concern with the play, which is that the way this is happening, I think it's very unlikely that this is the big one. But what we want to do then is we don't want to play it all of it just yet. We want to time it a little bit more, wait for it to keep going up.
Exactly.
Right? And so if we see that there is no
2,500 in now.
No, 2,500 isn't now. 2,500 is the total.
Yeah, I know, but like now.
Now we just want to play maybe 200.
Yeah. Scale in,
yeah.
Relative.
But the issue is, like, at the very least, if it happens all of a sudden, then at least we're in at least a little bit. Yeah. So I don't want to miss this one because this is huge.
Yeah.
So let's then go back to our marches, and then just do a spread on these. So these are what, 25 or 15 difference?
Mm-hmm.
15. It's got maybe 20. Maybe we'll play 20 on it. 20 for a 500 for 100. We'll get, 5 of those.
Took my fingerprint.
No, I didn't. Can I go to the calculator?
Yep. Alright, so
if we make it,
this is going to be in March.
This is our 20% play.
Wait.
This is the 20% play, right?
Yeah, it's 20%. Okay. So then this would probably be in. I guess let's make if this is let's see now. I don't know. Do you want to put 50% in April or even further than that?
Let's put half the 50% in April and half the other part in.
Okay.
A little bit further.
Oh, I mean, was it May? Are we in April or
we're in
March, April,
May? May.
Oh, so this one's more May, and I guess June.
But at
This
least if we
one's in
get
the middle
1
of
month,
that.
we'll get a huge fucking spike on it. Oh wait, that's why we're buying the spike. Okay, okay. I know what we should do for the close one.
Okay.
I don't think we should buy the spread for the close one. The reason I don't think we should buy the spread for the close one is because if it does happen soon, then it's going to be a very big drop, and the prices of those are going to react more than the other ones. Right? So if we cap out our maxes, maybe we can do a put back spread. I hate the idea, but it could work.
Okay.
I don't know how this shit works, but like
It's just financing one.
it just hedges it with the spread.
That's it.
So as long as it doesn't fall up there, you don't lose. So if it goes up a shit ton, then whatever. So he's doing the calls? Is it a putback spread or a callback spread that he's at?
He is a putback spread.
Okay. So we'd have to do the same thing.
Mm-hmm.
And that could return a lot in a huge drop like this.
Yeah, I mean, the whole idea of a debit right now
Yeah.
is because we want to get closer strikes, but using, like, not still a
Not
lot
as
of
much money, yeah.
and getting quantity.
Mm-hmm.
But with this, if we do a put debit,
Yeah.
put back spread, then we're going to be, upfronting a little bit more, but we all still finance some of the
play, yeah.
with the debit.
And I think that's a little bit better because it's like we don't have to spend
It's a mix of debit and naked, actually. That's what that is.
Yeah, it is. And it protects
So it's the same thing.
and it pushes. I think the reason I'm saying is because it's like I don't want to cap out our gains on this one, and because we're doing close up. Like farther out, yeah, fine, fuck it, cap that shit. But like this one, no. The reason is because if it happens soon, then you can make the most off that.
Mm-hmm.
But if it doesn't happen soon, then I don't want to lose the whole investment on it.
Right.
But yeah. So I don't know. How do you think we should do
I
it?
think I like the put back.
A put back spread?
Yeah.
Okay.
Because it still combines debits as well as some naked puts, so that makes.
So let me try to set this one up then. So he bought you sell the in the monies and you buy the out the monies.
Just do a debit on a put.
Yeah.
But then just add one more on your.
Your
call
all right.
side.
So a debit spread, right?
Yeah, just a debit spread and then add one
Alright.
more on the call side
So
or whatever you're buying.
Let me do these ones. These are kind of fucking big. Can I do these two? 18 and 20.
Sure.
So let's try to sell the 18s. These are so big. I don't know what to price these in.
Look here instead, and actually see the latest.
Okay.
And then that.
Okay.
So
let's say. So if we're buying.
So we can buy the 22, and then so this is 20, about 30. This is 25, and this is 10. This is 20 and 19. But we want to say in this area. So 30 and 20. So 25 and 30, and then 40, and then 40. So then this is 25. I think I like this 23.
I do too.
23 and 22.
So we buy.
So buy the 23, sell the 22.
Okay. So I'm buying the 23, not at 340. What should I actually bid it for?
So 23, right? So it's last execute is 130. So
130. Yeah. And then I'm gonna sell the 120. The
22. Because that's 25 cents per.
How much was the last bid on that one?
105.
I feel like I might get filled. And then I have to double up on the buys, right?
Yeah. Quantity. Yeah. Exactly.
All right. So let's see. The buying effective. The max profit is 2170.
Mm-hmm.
The max loss is 220.
Okay. And now, actually, let's just test it out right now to put, make that back to 1, and then see the max loss.
0.
Max loss 0, max prop.
Why is that possible?
That's not possible. Oh, it's because this went to 10 for some reason. 20.
Oh yeah.
Wow. Yeah, so it's changing. Okay, so.
Oh, it's because the price of the spread. Yeah.
So that's fine.
Okay. So 240. So because we don't put in the prices for these. You just pay for it. Yeah.
Okay.
So I can increase the amount that we could lose, and decrease the profits. I can pay more. This one doesn't really change your max profits at all. So you just pay whatever you pay.
Okay.
But you have to upfront a higher max loss.
Yep.
Does it say anything that it's a put back spread or anything?
No.
So should I just open one of these?
So let's see. So this is at 245, but it's actually at $1.
The dollar spread?
$1. So that value is because that's not the spread, is it?
Yeah, this is
VIX.
the. Oh yeah, maybe.
Right.
No, this is just the cost of the whole thing. So I'm not putting in the individual prices. I'm putting in the
Oh.
I'm just putting in the price of what I'm willing to pay for this spread.
Oh, that makes it tough because I don't know how much the debit is and then how much your naked is because you might be overpaying on the naked.
I could drop it. Well, what's the spread on it here? And we can just do it accordingly. Right?
So it should be 25 plus 100, so 120.
All right, so I'll put in 125 and see if that gets filled.
We're buying the 23, so it's 135 plus 25, so 175 is the actual thing.
Okay, let's try that. I'll do 180. No.
Is there any way to
individual edit them?
Just look at the. Why does it say at 345?
That's the last cell, I guess.
Net debit. Okay, this doesn't.
Huh?
Wait, by clicking this, it gives you a second confirmation, right?
No,
Sure?
I don't think so. Because it's review and send, so.
Yeah.
Are you trying to edit the prices manually?
Yeah.
Well, we could fill the whole thing manually if you want to.
Okay, so
like buy one, sell the other.
Yeah, actually, we can do it one by one. We
Yeah.
can buy the debit right now, which is what this is,
And then buy the second
and then
one.
buy the second one for what it is, what we want.
Okay.
Yeah, that works. So then, therefore, we want this spread to be 20 or like 30, I guess, instead of 25.
So do you want to try that then?
This is 23, 22, 23, 22. That's about 30. Yeah. So did it say at 30? So yeah, we probably have to pay more, but let's try with 30. Right now.
Oh, I guess you do get a second one.
Okay.
Did it charge you even if it doesn't get filled?
No, that one makes sense.
If it's not getting filled, it's not going to get filled. So let's try 35.
35.
That scared me. Yeah, you keep breaking your finger, huh? No, let's try 40. Fuck. Now we gotta reopen it.
Replace it.
Alright. Well, do you remember?
25.
It was
23, 22.
buying the 23, selling the 22.
Yeah.
Alright. 35, let's try 40. Yeah? Great.
So yeah, that looks right. Failed.
No.
Just wait on it, I guess.
It's not gonna get filled. At this rate? I'll try one more. I'll try to replace it at 45.
Okay.
Okay, cool. Now I have to buy the buy this band again, right?
Mm-hmm.
Alright.
Actually, wait. Go to your positions, and then see the individual legs. Can you just click on it once? Yeah.
Yeah.
And then what is our trade price on the one that we bought? 228.
Mm-hmm.
So that's what it's going for. 228.
Did it change here? Or
Last X 23, 24, 22, 23. Wow.
do we overpay?
Fuck. Is this March? Oh no, this isn't March. Oh my god. So
What?
alright. This is March 18th.
Did we buy the
I'm
wrong
looking
one?
at the wrong one.
Oh, it's March 25th.
Yeah. Okay, so that's better. I guess that makes sense. So
23, 22.
23, 22, yeah. So yeah, 228.
That was mine,
Yeah,
probably.
that's yours. And then this one is $1. Does it make sense? That's 183.
183.
Okay.
Which is good for us, because we're selling that for more.
So then someone sold it for $2.28, and then we're going to have to buy it for $2.28
Okay,
individually.
I'll do that. Should I do that?
Yeah, I guess.
Cool.
Yep. Is that the right one? Yeah.
All right, we're going through with this.
So now we're risking, so 228 plus, 40. So about 300 in this one.
Mm-hmm.
And so
Right.
that one is
But it has a potential
about
of 2,000.
About March. Yeah, it does.
All right, we're filled.
Okay, so net liquidity 552 minus 212.
So
So that's about
it just dropped. So 200.
okay.
So
About
200,
two.
250. It's 240.
Actually, just use the trade prices
Yeah.
instead of the actual, because that makes more sense. How much we're in for it. Minus 183 is 257. 257.
All right. Motherfucker.
257 260. Okay, so 260 for now.
Market's about to close.
Oh, it's on. Oh, wow.
Time.
Okay, so now we have, I guess, around 250 left
Mhm.
for anything March related.
Just straight puts. Lower.
Maybe now we do a credit spread in the calls.
Yeah, we could try it. I don't know where the max I'm getting though. The price. Like I don't know where I can get the best prices on these. So if you look at them here,
Well,
we only have about 6 minutes. So.
Technically, it means that we have to go
In the money deeper.
lower.
Yeah,
than
like
our
closer to here,
22s.
so it's like 80. Why?
Yeah.
Why?
If we want.
Because this is like 150, right?
Mhm.
What is this? 20 and 19, 18, 19.
The 19 and 20 are 100 apart already, or like 95.
I don't know if we're gonna fill there, but we can try it. Yeah, I know. I see it though. All right, let's try it then, and sell like if it's cheap, then we can buy it. We can do that a lot.
Exactly, 200.
So I want to. So I'm selling these right, the 19s,
Yeah.
and I'm buying the 1920s.
No. Switch that then.
What do you mean?
You sell the.
You sell the more expensive one. That's a credit spread.
Oh yeah. This would be below 19.
Not credit. Yeah. Okay. So it's a credit spread. So yeah, the spread's coming out to be about 85.
Okay.
So I can I'll even it out to 80 because I know it's gonna fuck me up if I try. Wrong way. Oh wait.
Do
I
like
need to pay.
85.
I'll do like
more.
Do more.
Yeah, because you have to ask for less credit.
I'm asking for less credit, so I have to go the other way, don't I?
Actually, don't even do this one.
Don't do it?
Don't do 19 and 20 because that means that.
Oh, it has to expire.
50.
It has to expire there.
Yeah, exactly.
All right. How about these?
That's why it's.
Or let's try these. These are 30 apart though.
The 30 apart, so that's how much we get if we.
So 30 plus 40. This is still 70. It's at 24 and 25.
I don't like that. I don't like the credit spread.
I don't like credit spreads either. That's why I was like, I don't know about it. But
Better for further out, but I don't know.
yeah. So maybe just outright puts, like cheaper.
Cheaper,
Like if I just buy the 16s
Mm.
for like $20, I'll buy like 2 of them.
Right.
That's kind of easy. Easier. It's like cost me 25. I'll pay 22. I'll get 2 of them. Why is it not working?
10?
No, I'm just joking.
I mean, that's how much we have. We have like 250.
You want to do 2? We could do 10. It's scarier on this account because it's a bit smaller, but
No, let's do 5.
how about let's do 2? Or
Oh, yeah, let's scale in. Let's wait for tomorrow. And
So,
we'll set
2?
Yeah.
so 47.
Yeah.
We'll be very happy if the VIX just tanks tomorrow.
Mhm.
But I'll also be kind of sad. I'll try paying. strike rate then?
2016.
Yeah.
So that's on March 25th, 16, 24, 25. Last executed was 30.
Try
So-
27.
Yeah, do 27.
Cool. Alright, we're in.
Last executed 25. Nice.
Oh, I got fucked then.
So go to positions and see if we're actually 25. Yeah, 25. The trade price.
Oh, I got filled up?
Yeah.
That's me?
Yeah.
Cool. Alright, we're puts now. Let's see how this goes.
Dope.
Nice. Alright.
I like these swings.
I do too.
Good.
Alright, nice.
Okay.
Alright.
Some good thinking, some good percentages we're using.
Yeah, exactly.
So now we
Oh shit.
plus-
Someone's like, what is that? You still there, Justin?
20, 20, 40, 300.
Alright.
Of what day is today?
Today's the 28th.
Alright, well, this is an important sticky note.
Yeah, put it up there. But I want to use the big account to buy outright puts longer out. Alright, cool. This was a good stream. Alright, guys. You can follow the trade if you want to. I'll probably put it in the comments or some shit like that. I don't know. We'll see. Alright, bye, guys.